All right, guys, special announcement. Here's what we're talking about. Mortgage rates are headed in the downward direction. The Fed, Jerome Powell, came out and said that he's going to lower mortgage rates approximately 2.75 basis points over the next 9 months or so, heading into election season, which is pretty much this time next year. Well, next November. We're in December right now. So, what is 2.75 basis points? Well, if you do the math, from roughly 7.5% where mortgage rates were, minus 2.75%, one could assume that they're going to end up somewhere in the fives. Okay. So when we see a five somewhere in the mortgage rates, that is going to be um, the gravy train. This is going to be exactly where everybody gets super excited. People are excited now, but they get really excited once we see a five. So what do we mean by that? I mean, when it comes from 6 down to 5.9. So once it gets to 5.9, pretty much all hell is going to break loose. People are going to jump back into the marketplace and they're going to be buying homes left and right. The trick is to try to get ahead of that now. Here's why. The second that interest rates start ticking down, which they already have, they were at 8% just a month ago. Now they're roughly 7.5%, and they're headed in the downward direction. Actually, I think they're closer to 7% as of today. But as they head in the downward direction, what happens is buyers who are on the fence jump off the fence and back into the market. When they jump back into the market, that increases buyer demand, which theoretically and per the law of economics pushes home prices up because demand goes higher, inventory remains unchanged, which is relatively low, and the home prices will continue to go higher. So what does that mean? That means that we have a window of opportunity to jump through right now, take advantage of an interest rate that's headed in a downward direction while prices are still relatively low. As interest rates go down, prices will continue to go higher. So the rates will inch down, the prices will inch higher. So you want to jump through that window before the prices go up too high and the rates remain relatively low. Now, remember, if you lock in an interest rate today at roughly 7, we'll call it 7.25%, then that means this time next year, if interest rates are trading at about 5.5 or maybe 5.75, then you could do a refi. You could refinance your mortgage into the lower interest rate, and then you can hold that lower interest rate in perpetuity for the rest of the duration of the loan or the rest of your life, or however you want to slice it. Why would that be a win-win situation? Well, you would have jumped through that window of opportunity, locked in a rate today, got the lower pricing today, and then this time next year when prices theoretically are higher, well, then you would refinance the lower rate, and then you'd be in a win-win situation because you got the lower rate and the lower price when prices are higher. Do you see that? So most people are going to tell you that, yes, now is a good time to make a purchase on a property. Now is a good time to sell a property because think about it. If you're going to sell a house and your intention is to finance the next purchase, well, then you are also in that same group of people who needs to go ahead and jump through that window. If you are not looking to finance your next purchase, if you are a cash buyer, well, then it's somewhat irrelevant to you, kind of. Interest rates go up, they go down, home prices go up and they go down, they coincide with the interest rates. So it actually does pertain to you with that regard. So if you're going to sell a house, but you're not using financing on the other side on the purchase, well, you'd be pretty good selling now because home prices are still relatively high. Could they go higher over the next 9 months? Yes. But remember, if you're a cash buyer, you're going to pay probably a higher price in 9 months anyway because of the lower interest rates. So again, it's a nice time to jump through the window. I encourage people to do it if you can. Now, here's where I take off the realtor hat and I put on the investment advisor hat. Legal disclaimer, I am not allowed to give investment advice. Always, always, always check with a certified financial planner or a professional investment advisor of some sort before taking any investment advice. With that said, I have that new hat on, and here's what I'm going to tell you. Do not purchase a home if it is not within your budget. If you cannot afford the monthly payment, then it is not an option for you. Don't let people tell you that renting a property is throwing your money away. That's just a sales tactic that realtors use to try to get you to buy a home. Don't listen. Home ownership, in fact, is substantially more expensive than renting a home. There are some variables that go into understanding which could be more expensive or less expensive. For example, if you own a home free and clear, it's probably less expensive, but we're not talking about that. We're talking about acquiring an asset which has a monthly payment, which has an interest rate attached to it, which also has insurance attached to it, as well as taxes and other things like capital expenditures. That's when something breaks, you have to pay to fix it. Or vacancy rate. If you own a property free, if you own a property, not free and clear, but if you own a property in general, you are at a 100% vacancy rate because you live in it, meaning it's not rented out. Okay. So don't let someone tell you that that renting is a bad thing. There's nothing wrong with renting, especially if it falls within your budget. Don't feel the pressure to have to bust a lease to go and buy a house if it doesn't make financial sense. Okay. Only purchase the home if the mortgage payment is within your budget. Okay. You do not want the house to own you. You want to own the house. Lots of these phone calls I'm getting right now. First time ever in my career that I've ever had this type of negativity on the phone that I'm hearing. People, grown adults who have worked their entire lives are not able to afford their mortgage payments. So what am I seeing? I'm seeing an uptick in short sales. I'm seeing an uptick in foreclosures. I'm seeing an uptick in distress. Really sad stories. Older folks, people of whom which that, their spouses aren't around anymore. Maybe they passed away a couple years ago and they left them some money in a savings account. And that money is now dwindling down. Why is it dwindling down? Why? Because insurance premiums have gone up, taxes have gone up, the cost of living has gone up. Depending on your Social Security and your retirement account is not enough money anymore. So now I'm getting these phone calls from people who are saying, oh my goodness, Joe, the HOA just raised the HOA fee, which is also going up. Why? Because they have an assessment. They're going to replace the windows or the pool, or they're going to refurbish the landscaping. This is another $300 a month that I can't afford, or another $30,000 a month in concrete restoration, which we can't afford either. So they have to lose their homes. These are the sad stories I'm hearing on a regular basis. So be very careful. Be very, very careful. Do the math, consult a professional, talk to a certified financial planner, speak with a great realtor right here. You know how to contact me so we can try to run a ballpark of what the payment might look like. And we can also do a quick estimate to see how much cash you might need to close and things like that. Is it feasible? We'll do a feasible study. I'll hold your hand. We'll do it together. So with that said, now is a tremendous opportunity. You can jump through the window while interest rates are relatively affordable, but on the way down, and home prices are relatively affordable and on the way up. All right, guys. So you know how to get a hold of me. The link is in the description below. Go ahead and click it, and talk to you soon. Many blessings.